Ladies and gentlemen, welcome. Please be seated. And even more importantly, phones off. Anyone taking a call during proceedings will be shouting at the bar at 6:30. So if those at the back, there's plenty of seats over here. Please make your way across, sit down. Don't be shy. Everyone's phones off. Welcome. Welcome to the inaugural Singapore Gold Rush event. Obviously, COVID's behind us, thankfully, and we can all meet in person. And as I mentioned, this is the first event, the first Singapore Gold Rush event. And obviously, following this, thank you very much to Resource Connect Asia, to Stu McDonald and Prue, who've worked very hard on this with the Singapore Mining Club. And obviously, Resource Connect Asia follows today's proceedings. That'll be on Wednesday and Thursday, the 4th and 5th, in this venue. So a few big days here in Singapore, and glad so many of you could come, could make it. Some familiar faces and some new faces as well. My name's Geoff Mcnamara. I'm one of the directors of the Singapore Mining Club. I'll be your host this afternoon, and also the final presenter today. So we have an action-packed agenda, 8 gold companies, Mongolia, the Philippines, Western Australia, as well as Chile. So a lot of different jurisdictions, from explorers through to operators. So a very exciting lineup and a great timing. We've got gold testing all-time highs at 2,000. COMEX was at 2,000 this morning. It's come off a little bit. But very exciting time for the gold industry. It's been a bit unloved, over the last couple of years. Been pretty tough for the gold equities. But we've seen a fair bit of activity in the first quarter of 2023. Newmont's bid for Newcrest, a bid for Breaker recently. I see St Barbara and Genesis in trading halts today. So it looks like the M&A activity will be picking up in 2023. Again, I'd like to thank Stuart McDonald, Prue McFarlane, and the team at Resource Connect Asia for bringing this together. It's pretty impressive, and we haven't actually started, as well as the Singapore Mining Club, my colleagues who are seated down here. So it looks like it's going to be a great event. A few other sponsors we need to thank: to Andrew Naylor of the World Gold Council. Unfortunately not here this afternoon. He was taken ill yesterday. But great to have the World Gold Council as a sponsor of the Gold Rush event. SRK Consulting, I believe they've got a booth outside in the other auditorium. Thank you for your sponsorship of both the Singapore Gold Rush and the Future Facing Commodities Conference. And to the 8 mining companies. So, as I mentioned, some pretty exciting stories here. Good to see some of the people earlier. We've got, Darren Bowden with the Philippines, Mike Spreadborough, who I caught up with earlier. Thank you to Gareth at Black Cat Syndicate for stepping up at the last moment, and someone couldn't make it, and Black Cat kindly stepped in, so much appreciated. And a special mention to Southern Cross Gold and to Alto Metals, who will be sponsoring this evening's cocktail event, presuming no one answers their phone during the proceedings. Otherwise, that person will be sponsoring the cocktail event. A couple of things on the SMC. So it's a non-profit organisation. Any money that's made out of events like this goes back to doing similar events. So it's mainly about networking here in Singapore. And it's not just mining, it's commodities in general. So any profits we make from events like this will go back into hosting future events. Obviously, the intention is for this to be an annual event here in Singapore. But my colleagues are down here available and ready and willing to sign up for membership. So membership at the Singapore Mining Club, whether corporate or individual, be a 10% discount over the proceedings over the next couple of days. So we've got Campbell, we've got Clement, we've got Eric, and we've got the lovely Manessa as well. So they're sitting down in the front. They'll make themselves known. So anyone who'd like to join and be part of other events in Singapore, please do so. So as I mentioned, 8 companies. They've got 15 minutes. There will be a 2-minute warning. So without any further ado, we're going to start off with Steppe in Mongolia, but they have a short video to show us, which I have seen before, and it's pretty entertaining. So if we could kick off with that, and then Aneel will come up. Thank you.
Hello, I'm Dennis Quaid. Today's investors are more concerned than ever about saving and planning for the future. As we're about to see, there are smart ways to make the money you earn today help prepare you for tomorrow.
Gold mining has brought great success and resources to countries all over the world for centuries, and continues to be an extremely rich and viable economic investment.
Gold mining's been around for thousands of years. It's the original money. It's tried, it's tested, it's true, and it's undeniable. In periods of uncertainty, people flock to gold as a store of value. In the communities in which it's mined, it brings a lot of economic prosperity, allows people to upgrade their skill sets, brings GDP growth to areas that might not have that same opportunity otherwise.
Mining is the biggest employer in country, so it's created a significant amount of jobs in country, tax source for the government as well, and more importantly, I think education as well. It's created a lot of skilled labor force that's impacting generations to come. So it's certainly very meaningful and a big driver of the economy.
While it is relatively unknown to most people, Mongolia is a resource-rich country at a turning point in its history. Within the last few years, it has become the last frontier for large-scale gold mining projects, quickly improving economy and job opportunities.
Democratic Mongolia is only 30 years old. In the past 3 decades, our economy has quadrupled. Our current government, the Prime Minister and the President has been very supportive of foreign investments and developing of responsible mining industry. Our mining industry makes 1/4 of our economy, over 70% of foreign direct investment, and over 90% of our exports. Mongolia has full resources of coal, copper, gold, and iron ore, and many other minerals. 70% of our territories remain undiscovered to geological surveys, and mining license has been issued to only 1% of the territories.
Mining in years gone by had developed a reputation for exploiting local resources and not giving enough back to its host governments. We're no longer in that world. You can't be a proper listed mining company with all the disclosure and the obligations and not be a great partner, not take care of your host governments, your workforce, and give back to the communities. If you want to generate a return through gold mining and mining in general, you need a great mineral endowment and an environment which is supportive of unlocking that mineral wealth. And that's what we see in Mongolia. We're only seeing the start of the mineral potential in the country, and I think the government sees that potential, the host communities, and together we can unlock a lot of value for investors as well as for the country.
Gold is a historically safe investment for economic growth, and the industry boom in Mongolia is the proof.
We're glad you could join us today. I'm Dennis Quaid. See you next time.
Thanks everyone for joining, and I'm glad to be here at the inaugural SMC event here, the Gold Rush event. Certainly good timing with people paying more attention to gold, and sorry, I'm not Dennis Quaid. So as that video did a good job of explaining, we are a gold and silver producer today, focused when we started the company in Mongolia. where we've been in production since April 2020 from our phase 1 operation, which is a heap leach operation. And we're currently expanding into our phase 2 operation, which is bringing the sulfides online in about 2 years' time. So around Q1 2025, we'll be producing over 100,000 ounces per annum. For today, it's a 12-year mine life at about $850 all-in cost. We're currently producing from the heap leach, usual forward-looking statements here, at a run rate of about 40 to 50,000 ounces. So over the last 12 months, we produced about 40,000 ounces at about $800 to $850 all-in cost. For the next 2 years, while constructing the phase 2 expansion, we'll produce about the same 40 to 50,000 ounces this year and similar next year at about $800 to $850 all-in costs, and then doubling our production profile for another 12 years. So today, we currently have about 72.5 million shares outstanding. We listed the company in May 2018, so just under 5 years, at $2 a share Canadian. We're listed on the main board of the TSX. When gold was circa $12.50, we had build risk, capex risk, finance risk, and permit risk. So we've come a long way, and we're trading at about half the share price that when we listed, and we've doubled the size of our company. In fact, even further, I'll get into at the end here with our recent acquisition we announced. We have a very strong shareholder support. As a board and management team, we own close to 20% of the company, have never sold a share. As I mentioned, been public almost 5 years. Fidelity International owns about 6% of our company. Eric Sprott, the legendary mining billionaire and investor, now owns about 11% of the company. As you saw, Triple Flag and Elliott were our first backers in 2017 as a private company, and have been very strong supporters. So we have good alignment, long-term investors, and they're here to build a stronger, bigger platform. And we're getting there slowly but surely. So just a quick timeline of how we started this. So we started the company in the end of 2016, private company with no assets and aspirations of building a Mongolia-focused precious metals company. Today, we're focused on building a multi-asset, multi-jurisdiction precious metals company, and I'll get into a bit more of that. 2017, we acquired our first 2 assets. The ATO project was acquired from Centerra Gold for $20 million US. They had previously spent about $30 million US on the project, drilled 67,000 meters, 28,000 meters of trenching. More importantly, they got a fully permitted and licensed for the heap leach that's currently in production and will be in production for the next couple of years, but also for our expansion. So we are permitted for a CIL plant, a flotation circuit, a tailings facility, power upgrade. So it is a seamless expansion to our phase 2. So that was a great acquisition made in 2017. We were about 1.2 million ounces of resources when we acquired that project, inclusive of 210,000 ounces of reserves. Today, with, I would say, limited focus and resources while building our first operation to bring online, we're sitting at over 2 million ounces and 1.7 million ounces on a gold equivalent basis in reserves. So all our 4 deposits are still open at depth. We've only drilled down to 350, 400 meters. We put out a feasibility study in October 2021 on that expansion. It was just at over 10.5 years, and we just updated that feasibility study in the life of mine just about a month ago, and we're at 12 years, and we're still drilling underneath the deposits. So our belief is in 2025, when we bring our phase 2 operation online, it'll look like a 15 to 20-year mine life. The production profile will grow to, we think, over 120, 130,000 ounces. And again, the cost structure is very compelling at about $850 all-in cost. As COVID has impacted everyone around the world, it certainly did for us. In 2021, we had supply chain issues, so no operational or technical issues and recoveries, none of that. We just couldn't get reagents in the country, and it took over a year to solve that. And so we restarted production last March and haven't had any hiccups since then. Steady production. As I mentioned, we produced probably about 40,000 ounces over this last 12 months. We have 6 months worth of supply on site today and getting regular shipments. So we've worked through that. And just about a month ago, we announced an acquisition of a deposit in Peru, a 2.5 million ounce deposit that has about 600,000 ounces, give or take, of oxides and leachable sulfides, and 1.9 million ounces of sulfides below. Very similar structure and deposit like we have in Mongolia, except it's bigger as a start. And we plan to focus on advancing that project over the next few years and maybe build it in about 2-3 years' time. We'll build again the heap leach as a phase 1 operation and then come up with a solution and grow the sulfides, which could probably get a lot bigger than 1.9 million ounces. So you see me here in the middle. So our teams work together, core team in Mongolia since 2009. Can't see the slides, but it's okay. So there's a track record of success in execution in country, very, very importantly. And most importantly, as we would do in any jurisdiction that you operate, is we're very local. Our CEO's local, Mongolian, half our board are Mongolian, 99% of our workforce in country are Mongolian, and we're at almost 350 employees today. So being local in any jurisdiction is important. Obviously, you want to give back to that community. It's another layer of insurance. It's very hard for people to poke holes when you're operating if you're doing things properly, and that's what we're doing. And that's why you saw that video at the beginning. We were chosen by Viewpoint in the U.S. as a company that could demonstrate those positive things, those positive contributions that you can create in the jurisdiction that you're operating in. So for those who don't know Mongolia, obviously it's home to world-class assets, discoveries, mines, the Oyu Tolgoi mine being one of the biggest copper mines in the world. Our goal is to focus on precious metals, continue to operate and grow in Mongolia while adding diversification through other assets. But certainly Mongolia is getting, I would say from a perception, getting a lot better. Rio Tinto doubled down last year in country, consolidating Turquoise Hill. That's about an $8 billion commitment, further commitment in country. Zijin Mining made their first investment publicly through Xanadu last year as well. And I think you'll see a lot more Western countries coming into the country soon. And Steppe Gold has that distinct advantage of being a first mover. We already employ, we're paying taxes, we're paying royalties, we're well liked by the government for being local. You already saw the video of our operation in current form at a heap leach. This is the metrics on a go-forward basis for the next 14 years. So it's about $250 million US of NAV at circa 1650 gold, 130 million US of capex for the expansion, and quite a lot of obviously revenue. And so our goal is over the next quarter or maybe early Q3, we'll announce a debt package for the expansion into the sulfides. So we've already constructed the phase 2 fixed crushing circuit. You can see right here in the middle, and then we're going to start with the remaining build over the next 18 months starting this summer to hit that Q1 2025 timeline for bringing phase 2 online, which will continue to grow. Last but not least, in Mongolia, we have a second project, 14,400 hectare exploration license. We also acquired in 2017. Very exciting project in the southwest of the country, about 1,500 kilometers southwest. So there's no synergies, but it's a very exciting exploration license that we haven't had a lot of time and money to focus on, again, while getting up and running on their mining license and mining project. But the excitement there is that in the blue licenses to the north and south, adjoining ours, another company called Erdene Resources has already drilled over 1 million ounces. They're getting closer to 2. So we're certainly in the right area. From surface, we've seen some very encouraging results, and this could be another production center for us in country and an area for consolidation down the road. So we're very excited to get down here. And really quickly, just a highlight of that other project that we're acquiring in Peru, should close in Q2. It's, as I mentioned, just about 2.5 million ounces, so it takes Steppe Gold to about just under 5 million ounces. It's got oxides and sulfides. It's one of the highest grade undeveloped oxide mines in the world, so it's great at a grade of about 1.28 grams per ton, and allows us to, just on the option 1, phase 1 operation in Peru, probably get to a path of about 200,000 ounces in just the next, call it 2 to 3 years, with a lot of optionality on the 1.9 million ounces of sulfides below. So that is the Steppe Gold story. Thank you for taking the time to hear the updates. Thank you.
Thanks, Aneel. Actually, you've probably got time for one question. Any questions? I actually had a question. So on your presentation, on your shareholder list there, you had Mongolian nationals. So is that free float in Mongolia? Can you just explain? Because that's pretty impressive. It was about 15-14%.
Yeah, exactly. No, we're not. It is free float. It's private investors in Mongolia. We had some institutions invest earlier on as well, some banks,
and that's converted into private individuals and smaller institutions. So we're not listed on the Mongolian stock exchanges yet. We planned to a couple of years ago, but we didn't want to list without being a producer again. And so we'll look at, again, opening that up and listing in Mongolia so not only our workforce, but the locals can get access to the shares a lot more easier. Yeah.
Okay, that's great. Thanks very much, Aneel.
Thank you.
So now we have Gareth from Black Cat Syndicate. So if you could come up, please, Gareth. And again, thank you for stepping in at the last moment when we had someone who couldn't make it. So Gareth from Black Cat Syndicate.
Thanks, Geoff. Good afternoon, ladies and gentlemen. Late call up, but we're ready to go. And we're here at the Critical Minerals Conference, which looks fantastic, but we are a gold first company, so this is kind of ideal platform for us. I'll tell you about our story. We have 2.3 million ounces of gold all in Western Australia. We have two of the highest grade underground deposits there, and our intent is to bring them back into production. We could be pouring gold as early as next year. At the moment, we're doing all the study work and drilling out the resources, so I'll talk to what we've been doing. Map of Western Australia, the best part of the country. All of our resources are within the state. It's 400,000 ounces at Paulsens. That's project number one for us. We've got 650,000 ounces at Coyote, and we've got 1.3 million ounces down at Cal East, which is where we originally floated, and we've built that up. So we have 3 projects ready to go. Our plan is to turn them on one by one and get ourselves up to a run rate in the future of around 150 to 200,000 ounces. The good thing about the projects that we have, the 2 high-grade deposits at Paulsens and Coyote, they have installed infrastructure. So, they already have the mills, they have the camps, they need some refurbishment, and then they can be kicked back into pouring gold. So our focus at the moment is on Paulsens. It's the lowest capital, it's the fastest one to start back up, and that's what we intend to do. We have some critical minerals, and if you want to hear about that, come and see us at the booth. I'll talk a little bit about that, but not much. Corporate structure, 267 million shares on market, around 120 million market cap at the moment. We've got about 45% held by the top 20. We've got some decent funds in there, Franklin Templeton, Earth Resources, US Global. The directors hold 10% of the company. They've invested $8 million themselves over the 5 years that we've been in existence. Those directors, we've got Paul Chapman here with me at the conference, so come and see Paul later on. But Paul and Les Davis, they founded Silver Lake Resources, took that from a concept and certainly built a mining company out of that. We've got Tony Polglaze, he's built mills all around the world and successfully taken companies from exploration through to production and takeover. Philip Crutchfield is a King's Counsel on the east coast of Australia, dabbles in junior resource stocks as well. And then myself, I'm a mine geologist, so looking forward to actually getting this into production. So we've been around 5 years. The one thing that we've always consistently done is put the money back into the ground. We started with no resource when we listed, and we have 2.3 million ounces right now, and that's because we're very active and the money gets put back into the ground. Right now we are focused on margin, so we have 2 of the highest grade resources in Australia, and we want to get them back into production, and with the cash flow coming from the first, we'll reinvest it into the business. Our staff are all aligned with the company's values and the directors, and we have KPIs that they'll be rewarded should we get each of these projects up and running, which we will. So I'll talk to Paulsens mainly, that's where we're currently busy. I'll talk to Coyote and wrap up with Cal East. And Paulsens right now we have 2 rigs, and we plan, as I said, to be in decision point by the middle of this year, so there's a lot of activity happening there now. Coyote, we did a resource upgrade earlier this year based on the 5 months of drilling last year, and that was a substantial resource, and it's a very high-grade deposit. And Caliste, we've got 1.3 million ounces. We released a feasibility study last year. We can build an 800,000 tonne per annum mill outside Kalgoorlie and get cash flow from that project. Just good luck building at Kalgoorlie at the moment. So Paulson's kind of well known in WA at least. It's the mine that started Northern Star, took them from a junior explorer to a producer, allowed them to get some cash flow and then leverage their position to the point that Paulson's was effectively too small a scale for their business. So what we have here is a 1,000 square kilometres of fantastic tenure. It is very much underexplored. We've got a 450,000 tonne per annum plant. Doesn't need a lot of capital to get it going. A dewatered and ventilated underground mine. We've got two underground rigs in there right now drilling. We've got all the permits in place, and we're really ready to move forward with this. We've updated the resource last February to 258,000 ounces at 10.8, and right now we're working on the next resource upgrade on the back of the drilling we're currently doing. We do have the third largest antimony deposit in Australia, and that's at Mount Clement, and we'll talk more about that tomorrow if you come and listen to that talk. So in terms of the underground, as I said, we just did the resource update here in February, and we're currently drilling this to expand it again in May. 56% of this is measured and indicated, and if you look at it, it's sitting now currently at about the average run rate that this mine had in terms of resource. So it ran for 13 years, and it typically only had around this sort of 300,000 ounces in the resource. So one of those mines that has, you know, a fairly short mine life but goes forever, or until you stop drilling. So for us, it's all about drilling. We've got the two rigs here, and we're building on this resource. We're getting really good results. And we're looking forward to getting an increase in this and then a decision to restart. So one area we're sort of focusing slightly different to the previous operators is the gabbro veins, as we call them. Now, the main lode here at Paulson's effectively is a gabbro vein. It's a rather large quartz zone on a break in the gabbro. But if you look on the other side of the decline, so turn the rig around and drill the other way, there's a whole heap of narrow, high-grade veins within the gabbro. And we've had really good success with that. About 33% of the resource is currently hosted in those veins on the sort of the other side of the decline. And we've got lots of drill hits coming out at the moment that haven't been included in that, but obviously will be in May. So fantastic for us, opportunity left in the ground. We're still doing lots of work on the main lodes as well. Regionally, there's a fair bit going on here at Paulson's. You know, after they found Paulson's, they did focus in on mining that. There's lots of rock chips, lots of soil, anomalism in the area, but there's never been much drilling. So there's some fantastic copper grades, probably too small to read on, but come and see the booth and pick up a pamphlet. But there's gold, copper, silver, other base metals kicking around the area. So as we move forward, we'll be doing this exploration. We plan to be drilling some of these targets in the middle of this year. Belvedere's already got some designs that we've been putting around that, so we can mine that as a satellite deposit, but it's still open, so we want to keep drilling that before we start mining. So a little bit about antimony, and come and see us tomorrow if you want to know more about antimony. But we have a fairly sizable deposit here. It's a base metal and precious metal deposit. So there's a lead antimony rich zone to this, then there's a gold copper rich zone. So we picked up Paulson's for the gold, obviously, and this was a bonus. But certainly with antimony prices where they are and the critical mineral thematic going on, this is quite important. So this is open and growing, and we'll be doing more work in this area in the middle of this year. Looking at a long section, there's an open zone between the east and the west lenses here, It's open at depth, it's open, there's multiple lodes here, and there's shallow areas that are open as well. So lots going on. We've got some fantastic rock chips, 50 grams gold, 6% copper, 6% antimony, and 2,000 grams of silver all in that one rock chip that's 200 metres along strike of the main lode here. So it looks really good, and we're just looking forward to getting out and drilling this. So Coyote, quickly, is up in the Tanami, so elephant country. There's some big deposits like Cali up in the area. We've got the only plant on the WA side of the Tanami. 885 square kilometres here, very much under-drilled, is common thematic, but certainly it's not the easiest place to work, but there's a lot of opportunity up here. So there is a plant, there is a camp. We sort of dominate in terms of the infrastructure in the area. Hasn't been operated since 2013, so we'll need a bit more work to get it back up and running. But with the cash flow coming out of Paulson's, we expect that we'd be able to do that. So we did upgrade the resource here, 356,000 ounces at 14.6 grams per tonne gold. Makes it a very high-grade resource. So obviously we're doing studies to mine that and studies on upgrading the plant as well. In terms of a little bit on the resource, 1,000 ounces per vertical metre with what's left. Obviously there was mining here, so they mined the south limb when they were operating previously. We've come back in and focused more on the core of this system, because you look down the road at all the other big deposits in the Tanami, and it's the core of the folds which hosts the gold. So that's what we've been focused on, and had a good win with the resource out of that. So there's going to be underground here again. There'll be an open pit here again. It's just a matter of time, and we'll be doing the work over this over the next couple of years. The area itself still has lots of big targets, big kilometre scale arsenic anomalies, low-level gold anomalies, which is all you're ever going to get in this area. There's also some fertile nickel, cobalt, platinum group intrusives. We've got heavy rare earth targets. So there's plenty going on. Gold first business, generate the cash, and plenty of action on other commodities. And lastly to Cal East. Now we did float Cal East back in January 2018. So we had an 80 square kilometre tenement holding and zero resource, and obviously we've built that up firstly with exploration and discovery, and then we made some acquisitions, and then we grew those acquisitions. So we got it to a point we wanted to show that it could be mined, so we spent a fair bit of time and effort working on the feasibility study, which takes time. It's all approved to go and build an 800,000 tonne per annum mill 50 kilometres out of Kalgoorlie. The big thing missing from this at the moment is the workers and the accommodation in Kalgoorlie to actually go and build it. So when the time is right, this is on the shelf, and obviously with the current gold price, this makes a lot more revenue and a lot more cash flow. So this is ready to go. And quickly, news flow, plenty of it, like always with Black Cat. There's constant news flow. We've got 2 rigs in the underground at Paulson's. They are all building to a resource update in May. After that, we'll release some study work, and then we'll be making a decision. And should that decision to restart mining be positive, then it can happen really quickly. We can start that work in the second half of this calendar year, and in theory be pouring gold early in 2024. So that's where the company is going right now. Obviously this is project number 1, and then you've got the second project already in the portfolio. So fast-growing resource, you can expect more coming out of that in May. There is multi-commodity potential in our portfolio. We are very, very active, and certainly in the current gold price environment, if you haven't invested in us, maybe you should be considering it, and come and join Paul and myself on the register. Thanks very much.
Thanks, Gareth. Very insightful. We've got time for a question. Did anyone have a question at all? Anyone? For my edification, so the Coyote corridor, is that all in WA, or does some of that go across into Northern Territory?
The Tanami belt, it does, most of it's in the Northern Territory, and it does cross up into WA.
Yeah, Okay, and but all your properties
all
are in
of our
WA.
tenements are WA. Yep, we haven't crossed the border.
Okay, thanks very much, Gareth. And now we're going to hear from Darren Bowden, who I had the privilege of meeting this morning, had a coffee. Metals Exploration PLC, so AIM-listed company with an operating project in the Philippines. Thanks, Darren.
Thanks, Geoff. Afternoon, ladies and gentlemen. Today I'm not going to blow the horn on Metals X too much. We've been operating for nearly 10 years now. Our deposit's running down, and really I want to focus on the geopolitical situation in the Philippines, just to give everyone a feel for what it'd be like to bring investment back in to that country. It has, button's not working. There we go. So just to take you through Metals X, basically we've got about 7 million tonnes at 1.36 grams. We're a refractory gold operation running a BIOX plant. We did struggle for quite a few years to get the BIOX running, but we're now at around about 88-89% recovery with the refractory process. Using that BIOX as an intermediary oxidation. The operation is 98% Filipino. We're 28% female in our workforce. We're very proud of that. We do produce just over 70,000 ounces a year, and we'll do that through to the end of mine life. 26, 27 is when we run out at this stage. Currently generating about 30 to 40 million free cash. In the range of $1,200 an ounce, and that's all including all of our external costs on our AIM listing. We are proud to, our local company FCF Minerals did receive the President's Award last year, and this has made us a company of choice in country, which means we get a lot of people coming to us looking for expansion into the local market. And we are looking at that. So that's why I'm probably not going to talk too much about that. I don't want to bring anyone over a wall, but I will go through what Philippine mining is all about. There's two types of licensing structures within the Philippines once you move beyond an exploration permit. Both have their pluses and minuses. You've got what is the traditional MPSA, which is basically a participation and sharing agreement. The issue with this one, it has to be 60% locally owned. And that's the reason for that is it can own land titles within the country. And the minute you do that, there is a large Filipino ownership required of that local company. So that's probably one of the biggest drawbacks of that structure. It is a lot easier process to get licensed. There has been more rigour put around the licensing of MPSAs. Before you didn't really have to do much to get one, but these days that has changed. The current President Marcos government is very proactive in mining, so that there is a push now to try and move some of these MPSAs forward. So we are seeing a lot of foreign direct investment move back into the country, and some of the majors are there looking around as well, which does help. There is a structure that we can work with, and I'll explain that a little later with MPSAs. The benefit of an MPSA is the tax structure is significantly lower. So if you've got a very large deposit that's going to run for 20, 30 years, then an MPSA is the structure you should be targeting within the operation. However, an FTAA, which is a Foreign Technical Assistance Agreement, allows a company to have 100% foreign ownership. And that is a structure a lot of people do see as beneficial. However, there's only ever been 3 permitted within the country. Very difficult to get that permitted. We are an FTAA. We're one of the 3. There is a benefit to an FTAA. You do get a tax holiday to recover capital investment. That tax holiday is based on the financial position of the company. Our tax holiday was 5 years. However, the issue with an FTAA, your tax regime is between 50 and 60%. So there is a significant tax burden. So again, short mine life, you're probably better off going for an FTAA. Long mine life, you're definitely better off going with an MPSA. There is a significant amount of ground within the Philippines that is held under FTAAs. People, when they first come out, there's probably 1 million hectares that people just placed FTAAs everywhere. Not one of them's approved, but all the ground is now locked up in FTAAs because none of them have been cancelled. So there's a lot of good ground that actually you can't get access to at this stage, which hopefully the new Philippine government is starting to move to cancelling those to open up that ground. The key issue around an MPSA is the local ownership, and how do you bring foreign direct investment back into the country to assist when you've got a 60% local partner? Well, there is a structure that works. Commercially, foreign companies can own 100% of a commercial venture. You can't own the land it's on, but you can own the commercial venture. So the structure that the majority of foreign investors do use is using basically an ore sale agreement. It's like a streaming agreement where the ore's sold to the foreign investor and all the money's then loaned back to the local company. That then passes the majority of the ownership or the majority of the revenue back outside to the foreign direct investment and reduces your tax rates back to a very favourable tax rate. So this structure is the one that's used. Masbate, most of the large operators who have been in the country basically run under this structure where they do have a 60% local ownership. That is fraught if you do not pick your local partner correctly, if you don't know who you should be going with. My advice, give it away. Find people you can trust and make them your local partner. Because if you get someone to buy into it and they own your board locally, your structure for your ore sale agreement becomes significantly more difficult to manage and to own. The RTG, there's another companies that 5-6 years now in litigation trying to get their deposit back because their local partner was the wrong partner. So you've got to be able to manage those situations. But if you get that right, Masbate, a classic example, it works very well and everybody profits as they go forward. So there is a structure. Being in the Philippines now for 4 years, working on an FTAA, it works. But to get approval for it is extremely difficult, and if you do have a large deposit, you need to go this way. This is the focus you should have. The approval rate on MPSAs is significantly higher, even though there's probably only been 4 approved in the last year. There hasn't been one FTA in 10 years. That's really what you're looking at. I do believe that the Philippines is, under the new government, definitely more proactive. The Marcos family themselves are a large miner in the country, so there's no doubt there's a buzz like you see around the world for investment and people coming back into the industry. So Philippines is picking up, and there is definitely some scale deposits there that are ready to move. Tempacan is one of them, and there's a few others that I think we'll see in the near future moving forward. Okay. What's the other issue? It's the same issue as every developing country. We need to respect the rights of the indigenous peoples. And this, in the Philippines, has a structure and a framework. So as part of your mining agreement and in the framework of actually generating an agreement to be able to mine, you need to go through a process of basically free and informed consent. And that free and informed consent eventuates with a certificate of precondition, which means that the local indigenous ancestral domain and the community that exists in that domain have given you the right to mine and exploit the resources within their area. It's not the first country. You see this in most developing countries right now. Most countries all work on a structure of this. The issue with this one, it'll take at least 3 years, if not longer, to get up and running. So there's a lot of work that you have to do at the front end to make this an agreement that actually has validity, that the community do buy into, that they're fully engaged with, because as we all know, we work in remote locations and the first people who shut us down are our communities. And if we don't work well with our communities, we won't be working at all. So under the government framework, the communities themselves have to form what is called an Indigenous Peoples Organisation, and that organisation then has a commercial responsibility to negotiate agreements with foreign investors or anyone who wants to do exploitation within their area, whether it's forestry, whether it's geothermal, or whether it's mining. That is then supported by the NCIP, the National Commission for Indigenous People, and again, government bureaucracy. This is where everything slows down. However, they are there to help, and working with them is an absolute necessity if you want that to be validated, because the process, once you've got an agreement, has to be validated by central, and the central government can take anywhere between 6 months to a year to validate that process and ensure that that's working for you. So what I would say is that I do believe the Philippines is a place of massive potential. I think everybody recognised that a while ago. There's, the Cordillera. There's been nearly 40 million ounces extracted from that area. You've got southwest, one of the best underground deposits. It's at depth, but it's very good. You've got Tampakan and a lot of other large ore bodies that are ready to go there. It's just navigating the framework and getting the relationships you require to make all this move forward is a critical part of the process to do so. FCF itself, 3 years to go. We have the people on the ground. We are working with a number of local communities, and hopefully I'll have a lot better story to tell around our business in a year's time when I come back. But at this stage, we're working through these processes, and I felt that if you do want to come to the Philippines, this is an absolute necessity to understand and to work with. Find the right local partner and work with the communities that you are going to operate in. Thank you. Thanks, Geoff.
Thanks, Darren. There's some time for questions. Did anyone have any questions on the Philippines? It is good to see the Philippines coming back. There's certainly some excellent deposits there, epithermal, porphyry coppers, some big deposits. Anyone have any questions? Jeez, can't get anything out of this audience this afternoon.
You've tried hard, but...
Yeah. Come on, I'll buy someone a drink if you ask a question. It's got to be a good question, but... Come on. No. So who's operating at the moment besides yourselves in the Philippines?
Masbate, that's B2. You've got Oceana Gold with Didipio. We're the three biggest operations in country. There were some other large copper deposits which were operating. They've all run down at this stage, but there's a number to come on stream. The largest local company, you've got Mcnamara, you've got Philex, you've got Benguet, which is the Marcos's company. There are a number of local companies operating, mainly in the gold space. There is a little bit of copper, but mainly in the gold space at this stage. Okay,
and are you seeing Rio, BHP, Freeport, any of those groups coming back looking at those copper assets?
Yeah, so the Freeport copper asset, which was at the top end of the Cordillera, they haven't come back for that. That's Celsius now are working that one. There's Sphere working the Tampakan asset, which was Xstrata, now Glencore. We have seen Rio in country, Rio Tinto in country recently, poking around. So there's no doubt there's definitely a movement for the majors to come back in, given the new government. And I look forward to it. If one of those takes up shop, we can see a lot of junior explorers coming back as well. We've got a question.
Marvellous.
Yeah, we've got all of our technical expertise is in country. As I said, we won the President's Award last year, which basically puts us as one of the top miners from a exploration, from a community, and from an operating point of view. A lot of people are talking to us. So, like I said, I can't talk too much about some of the prospects that we're looking at. But given we've got the in-country talent, we've got the in-country technical expertise, we're getting a lot of doors opening to us right now, and hopefully in a year's time I can give you some more colour around what that does look like for metals exploration into the future, because I do believe there's a bright future, and our first or our next project will be a Philippine project. That's guaranteed.
One more.
Yep, and there's still a lot of DSO nickel that is processed in the Philippines. There's no fixed requirement to have to process downstream within the Philippines at this stage. However, there is some HPL plants, there is some downstream processing. I believe it's Sumitomo who are there as well, but it's not forced, and a lot of the nickel is still DSO through to China. I do believe there's also a copper refinery. Glencore got a copper refinery there as well, but no, it's not a forced requirement as it is in other countries. Thank you.
All right, that's great. Thanks, Darren. And now we're going to hear from SRK. So if Michael Lowry could come to the stage. Thank you, Michael. Presume you're going to talk about some of the happenings here in Asia that SRK is working on?
Not quite, Geoff, but yeah, thanks for the intro, and thank you to yourself and the Singapore Mining Club for organising this event and allowing us to speak. So good afternoon, everyone. My name's Michael Lowry. I'm a principal consultant based in Perth, Western Australia. I specialise in resource modelling, mine geology and reconciliation, but one of the core pieces of my work is due diligence and audits and reviews. So I just really wanted to share today just a few of the recent challenges and probably the future challenges we're sort of seeing in that space, particularly around M&A when we're doing reviews and audits. So just a little bit about SRK Consulting before I go on. We currently have 43 offices around the world in 20 different countries, and I think we recently employed just over 1,700 professionals. We cover everything from very early stage mineral exploration all the way through to mine closure and everything in between. This week I've got 4 of my colleagues joining us for the conference. So we've got Mike Baer, the Managing Director from SRK Kazakhstan, Sabato Ghosh, from our Managing Director from SRK India, from Kolkata, Alex Thin, who's a Principal Consultant in Mining from our Beijing office, and Fong Shek, who's one of our Geology Consultants from Hong Kong. So they'll be around the booth over the next couple of days, so it'll be great to come around and meet a lot of you as we're going around the conference. So just as a bit of an introduction, as a lot of people in the room here are aware, obviously mineral deposits are getting increasingly hard to find, and in some instances then develop and get through to the approval stage for mining. Exploration companies are having to either pick over old ground in known jurisdictions, known mining jurisdictions, or go to more far-flung and remote jurisdictions in increasingly more remote areas to try and find large mineral deposits. Environmental, social and governance requirements are becoming more and more prevalent and are impacting on the viability of some of the projects depending on which jurisdiction you're in. And international reporting standards for exploration results, mineral resources and oil reserves are also becoming more prescriptive, and I'm going to go into that a little bit later in a couple of slides. And that's with each of the national reporting codes as they get updated. So currently in Australia, the JORC code's going through a major update. And again, in a little bit, I'll just go through some of the things we may be expecting from that update. So present challenges. A lot of what we see when we're doing audits and reviews, particularly for projects that are looking for funding, when we're doing reviews of banks or financial institutions, is a lot of legacy data sets, particularly in Western Australia, where you've got drilling way back from the 1950s, all the way through to even in the early 2000s, where there's little or no supporting documentation around those exploration data sets. So what type of drill holes they are, how they were drilled, what sampling methods were used, what laboratories they went to, or even fundamental things like quality control and quality assurance processes and sampling. There's also throughout time, different exploration companies may have used different surveying grids, different sampling methods between drill programs, different geological logging schemes. So trying to reconcile all this legacy data is actually quite a challenge for not only when you're putting together a geological model and a mineral resource estimate, but then also when you're trying to classify, particularly a mineral resource estimate, and get confidence in that legacy data. It can be even hard to even verify where your drill holes were in 3D space, what the assay values were, and even what your geological units you were actually sitting in. There's also a carry-on to some poor sampling methods, even in current exploration programs. For instance, only sampling in mineralised intervals, ignoring your waste units, and that becomes critical when you're getting to the mining end of a project when you need to work out what your waste geochemistry is doing. Mixing sample intervals, which is diabolical when it comes to a mineral resource estimate. And then limited analyses, so focusing either on one or two key analytes that you're looking for, whether that be, say, gold or nickel or copper, but then ignoring everything else, including your deleterious elements. So a classic example at the moment is lithium exploration in the goldfields of Western Australia, where companies are going back and picking over old ground that used to be for gold or nickel exploration, and looking at all that legacy data. There's gold assays and there may be nickel assays, but there's no other elements in there, pathfinder elements, to help you find lithium deposits. And another huge one that we see is the lack of bulk density sampling, or really poor bulk density sampling methodology. A lot of the resource estimates that I review have applied default densities that have been picked out of thin air, or from a similar project next door, or from a similar lithology that that particular mineral resource is in. Just to give you a bit of an indication, when you're looking at density in a resource estimate, something like a 0.1 grams per metre cube difference in your bulk density can be up to a 5% difference in your tonnage of your ore body. Density really matters. So, and finally, a lack of ore body knowledge. So the key thing for when you're going out to explore an ore body is actually understanding how your mineralisation got there in the first place, and that leads all the way through your exploration phase, into your geological modelling, into your resource modelling. If you haven't got a clear picture of what you're targeting, then really you're drilling and exploring blind, and that feeds into your resource estimates. So present challenges in geological modelling and mineral resource estimation. We're still seeing a lot of geological models and resource estimates that are rushed. So we understand that, particularly for junior exploration companies, the new cycle is critical for investment. But after spending a year drilling and spending quite a bit of money on every drill hole, to then rush through a resource estimate in 2 or 3 months is a real push. Particularly the more advanced you become, the more drill holes you get in there, the more understanding you have around your ore body. Resource estimates and geological models take a lot longer to produce and to get the right answer. A lot of the geological models we see sometimes are literally just a bunch of grade shells that are constructed in cross-section where people have joined the dots between drill holes. There's not a lot of geological context to those models. There's no background understanding of how that mineralisation got there. Rush resource estimates are usually done just using a generic estimation method where you've got very basic geological domains, very basic estimation settings, but there's been no proper investigation into how your mineralisation or your grade changes in 3 dimensions. You've really got to look at your geological complexity, your real interplay between your geology and your mineralisation, what the grade is actually doing within the deposit. How is it changing? Is it changing very rapidly, or is it very constant? The interplay between different minerals of interest within your deposit. So, for instance, copper-gold associations in a copper-gold deposit. Have you got copper where you've got gold, or have you got gold where you've got copper? A lot of times that's not taken into account, and it's just a really basic estimation. The estimation of waste geochemistry is something that's often overlooked as well. So for an early stage mineral resource estimate, it's not really that critical or important, but as you're getting closer to your mining approvals or your feasibility studies, this is when waste geochemistry becomes critical. Understanding whether you've got acid rock drainage or if you've got other nasties in there like potentially fibrous material, or anything else you need to take into account when you're building waste dumps or tailings dams. And I've already sort of touched on bulk density. So they're sort of the present challenges we're seeing. Future challenges. Geoscience and a lot of other professions in the mining industry are now changing, where we're getting a lot more data from remote sensing, whether that be at the exploration phase or at mining phase. And geologists are also less and less in the field because of the remote sensing, but also because of automation, particularly in open pits, which we're already seeing quite a bit in Western Australia. So nowadays, mine geologists can't actually physically get down to an open pit to inspect the geology in the pit. So we're relying more on remote sensing like drones and geophysical probes to actually look at the geology in the pit. So the challenge really with all this new data sets coming in is how do exploration and mining companies assess large data sets? So we already deal with large data sets historically, but the data sets that are coming out from all these remote sensing methods now are a magnitude higher. So there's stuff from satellite imagery, geophysical downhole tools, geological mapping, surface sampling, drilling, assaying data, hyperspectral data from drill core, and then a lot more mine production and reconciliation data, and processing data from a lot of remote sensing and processing plants, that feedback and reconciliation loops. So all of this data can be really, really helpful to improve exploration targeting or mine geology reconciliation, and then feed into mineral resource and ore reserve models. But then how do we actually process that data? And the key thing too is what skill sets do geologists, metallurgists, mining engineers need to develop in the future? And this is including this geoscientist too, going forward. So one thing I'm starting to learn is data science, which is a pretty obvious one. Other future challenges, a big one is going to be ESG. And how that impacts both exploration, but then also how your project progresses through your study phases into a mining project. Different jurisdictions have got different ESG considerations. In Australia, it's sort of a new sort of science, as you will, that's sort of coming into to the Australian and particularly West Australian mining industry now. And at SRK, we've sort of grown an ESG group out of our UK office that's now actually branching out into our other offices globally. So we've just opened an ESG group in Australia, and we're still learning on the fly as well about how we're going to incorporate ESG into every aspect of our work throughout the mining value chain. The JORC code is, as I said earlier, is also currently been updated. And while the details of the new code haven't been released, we have had a few snippets that have come out. One of the main impacts is going to be the changing requirements of who can and cannot be a competent person for the reporting of exploration results, mineral resources, and ore reserves. We think there's going to be a lot more of explanation around mineral resources with respect to reasonable prospects of eventual economic extraction. So previously, a competent person could, in their professional view, think that a mineral resource could be mineable or could not be mineable using either open pit or underground methods. Going forward, there's going to have to be a bit more assessment around that at the mineral resource phase. So not quite to the same level that an ore reserve has to be completed, but there'll definitely have to be some assessment prior to releasing a mineral resource. There's also discussion around how ESG factors are going to impact the reporting of mineral resources and ore reserves. Again, as I said, we're still learning about what those impacts could be, particularly on a mineral resource. Metallurgical testing and recoveries is going to come into the mineral resource space as well. And there's going to be a lot more focus on reconciliation between your previous mineral resource or ore reserve and your new model. So there needs to be a lot more explanation about the changes you've gone from your previous mineral resource to your new mineral resource, whether that be drilling or other factors. So I'll just finish up there, but thank you very much for the opportunity to have a chat, and we're at booth 26 next door over the next couple of days, and it'd be wonderful to catch up and chat to everyone. Thank you very much.
Thanks, Michael. Does anyone have any questions for Michael? I've got a question. An M&A banker once told me that 90% of most transactions fail for the resource, so they don't progress because the potential acquirer reviews the resource and the resource just doesn't stack up. Do you have a view on that?
90% sounds quite high, but certainly, yeah, a lot of our job is trying to explain to our M&A partners about what are the uncertainties and potential risks in each of those resource estimates that we review. So sometimes, yes, we do find problems in there which investors don't like, and it's just too much uncertainty for them.
Yeah. All right. Thank you very much.
Thank you.
Can I take one question?
Yeah, sorry.
For the new standards, is this only for Australia, or does this apply to the other markets? And number two, for the new standards, what is your estimates of how much longer these reports are going to take to come out?
How much longer is a very good question. It was supposed to be a JORC 2022 update. The real sticking point apparently has been around the discussion on competent persons, how they qualify. We had a big workshop in Perth and then around Australia for the other capital cities that involved the AusIMM and the Australian Institute of Geoscientists, where we were giving feedback to the JORC group and also ASIC about what we believed needed, in our view, what constitutes a competent person. Because at the moment it's sort of a person putting their hand up and saying, yep, I've got 5 years. JORC itself sort of relates mostly to the Australian market, but it is used in other markets as one of the codes. There are, I can't remember exactly how many codes, about 20 odd codes globally. JORC is one of the large ones, along with the Canadian code and a few of the others around the globe.
All right, great, thank you. So we are due for a short break now. More importantly, Richard Dickey Offer has put his hand up. He'll be doing the shout this evening. But lucky for Richard, the Singapore Mining Club has teamed up with Penamico, which is a short walk away from here in Chimes. So if you haven't had your fill at the end of the session today, at the cocktail, you can go across to Chimes and quote Gold Rush, and you'll get a 10% discount on all house drinks. So yeah, if we could take a 15-minute break, we will round you back up to come back for the 5 remaining presentations. So yeah, please help yourselves to a coffee, a water, a biological break, and we'll be back in 15 minutes. Thank you.